Welcome to Mind Your Mortgage. I'm Bo Christensen, your host and media marketing specialist at Security National Mortgage Company. Today we have Caitlan Pollock, a loan officer for Security National Mortgage Company. Caitlan, would you like to introduce yourself?
Yeah, I'm Caitlan Pollock. I've been a mortgage loan officer for 18 years, and I worked at Security National for almost 10 of those years.
In your career?
It's been good. Obviously, our market has been challenging the last few years, more so than the rest of my previous career. I got into mortgage. I actually got pre-approved to buy a house in early 2006, and mortgage fraud was a big topic of conversation within the media pre the mortgage meltdown of 07 and 08.
Definitely.
And I felt really overwhelmed.
Yeah.
I signed a stack of paperwork that I just felt, I was 20 years old and I didn't understand what I was maybe signing up for, and I didn't want to be taken advantage of. And I felt like I was going to do this a couple of times in my life, and I really want to understand it. It's a lot of money. It's a lot of years. And so the loan officer at the time that I was working with, I just asked him, I just said, where could I go to find out more information about this so that I understand what these documents are for? And he said, well, I guess you could take your mortgage licensing course. And at the time it was 20 hours. And so I took a couple of days off work and went and sat in a live licensing course with David Luna. If you're familiar with him, he's wonderful. He was a commissioner here in the state of Utah and a big person for continuing education and education of mortgage loan officers for several years. And at the time I took his live course and I learned a ton. And because of that, I'm super passionate about first-time home buyers. I know that it's scary and I want you to understand it. Like, no question is a dumb question. And if there is anything that comes up, I never want a client to feel stupid into what does that mean? Like, we use terms and acronyms in mortgage a lot that we forget that the person on the other end doesn't do this 40, 50 hours a week. So like, they don't know what an ARM is. They don't know what an APR is. They, all of these things, and they feel like, nope, I know what I'm doing. I'm a big kid now. I'm going to buy a house. And really they're like panicking inside, which is not good. And so I feel like my value add is really, I'm happy to help. Like, if you don't know what escrow means, let's talk about, let's talk about what an APR is. Let's talk about, all of those things go into a mortgage so that, because it is a lot of money and it is a lot of years and it's a huge expense of your monthly payment. It's also where you live your life. And so home ownership is just, it's something I'm really passionate about. And I think the less scary it becomes, the more people will do it. And I am a firm believer in it's the only way to build wealth is in owning real estate. So
yeah, I absolutely agree with you for sure. You did say you got into it around 2006.
Yeah, so I've been...
Had to have been a hectic time. What do you think is worse, getting into it then or where it's at now?
So that's a good question, and it's different. And the mortgage market is a little like it's a living, breathing thing in that it is ever changing. And so there was a lot less regulation than we have now with the CFPB and Dodd-Frank and TRID and all of these things that we take on as mortgage professionals today that we didn't have to do in 2007. For a good reason, now is probably more challenging.
Yeah.
And the requirements for qualifying for a mortgage are stricter now than they were in 2007. That we've got qualified mortgage and genuine checks and balances that they're checking on for you being able to repay that mortgage, which is very important. That we didn't have in the early 2000s and which led to part of the mortgage meltdown.
Yeah.
The other real challenge now is affordability. And in 2007, at least here locally in Salt Lake in our Utah market, homes were more affordable than they are now. And I had somebody say something to me several months ago that I'm Utah born and raised. So I've grown up here. I bought a home in 2009. And my parents, live here locally. My husband's parents live here locally. But I had someone say to me, and they said, that Utah's real estate market was actually undervalued for a really long time. And now it's really just caught up. And the more time that I've had time to digest that, I actually really agree with you. And we were undervalued and a pretty inexpensive place to live. And now it feels like a surge in those prices here in, Salt Lake proper and stuff, but it's really like a real thing. And it's people want to live here. Loans that we're doing are tons of out-of-state people, and it's just driven up the price. And I think it's sustainable, and I think it's kind of justified, if you're asking me. So,
yeah. Caitlan, what are the most common misconceptions first-time home buyers have about the mortgage process?
Sadly, there's a lot. And I think that programs change, guidelines change on a very real timeline in a short period of time. I mean, we get program updates at least weekly for different qualifying things. And I think that to no fault of their own, when they are thinking about being in the market to buy a house, they talk to people around them. And so they'll talk to their uncle or their mom or whomever. And sure, those people bought a house, but they might have bought a house 20 years ago. And so they think that they need perfect credit. They think that they need 2 years uninterrupted on their current job. They think that they've got to have 20% down, and none of that is true. You can do a mortgage with 0% down. We can do loans even with an offer letter if you're right out of school, graduating college and getting that first adult job. You don't have to work those places for 2 years interrupted. And a lot of people always tell me, well, I haven't been on my job quite 2 years. Doesn't matter. Depending on the sources of income that we're trying to use. Now, don't want to get like too in the weeds here, but variable income, commission, bonus, things that go up and down based on your performance and things, those we do need a longer term. But if it's consistent salary or hourly full-time income, a lot of times day one we can use it. So also the 20% down, that comes from if you do have 20% down of the purchase price, you can avoid private mortgage insurance. But a lot of times getting the mortgage insurance is actually like a better way to go. A lot of people don't know the interest rates can be better if you have that mortgage insurance on there. And so instead of waiting for years to buy while you save up for a down payment, you could really like jump into the market with a way smaller down payment.
Yeah, so that's really good to know. I didn't know a good amount of those, especially with like the job offer one or sure. What was that?
So if you were to, it's graduation time, if you're graduating and you're going to be starting a salary or full-time hourly based job, we can do it with an offer.
Wow.
So don't think like, okay, I'm now, got my degree and I've got to now wait 2 more years out of school.
Yeah,
I have.
You could go straight to a house instead.
Straight to a house, exactly.
That's awesome.
Yeah. Another thing is a lot of people think you can't have student loans for whatever reason.
Yeah.
And you can. And they don't even have to be in a repayment status for us to get you a mortgage loan. They do hit you with a payment even if you are in a deferment status, just so that when those payments do come out of deferment, that your debt to income ratios as far as qualifying, you've got enough cushion there. But no, you don't have to have your student loans to buy a mortgage.
So essentially people really just need to go talk to a professional.
So do I applaud people for talking to people in their lives that have done it. But really the best advice that I have is to talk to a professional in your area that knows your scenario and certain loan programs that you qualify for. Some of them are specific to city. So if you're using someone in Michigan and you're here in Utah, they don't know about the Own and Ogden program. They don't know about Utah Housing. They don't know about the Good Works program for Midvale, Murray, and Salt Lake. I do because I sit and work in this community every day. So keep that in mind. Go and meet with someone, especially for your first time. Talk to somebody who you can meet with face-to-face because it's a lot less scary than doing everything.
For sure. That is some very valuable advice. So can you walk us through the steps a first-time homebuyer should take when going through the mortgage process?
Yes. The very first thing they should do is know about what they are planning on spending monthly. So if you're moving out of your parents' home and you haven't been currently spending rent, I suggest for like a couple of months to decide how much money you have to allocate towards a housing expense. That's probably number one.
So hone in on your budget.
Yes, for sure. Most people are surprised by current payments. And so I talk to a lot of people that tell me I can afford about $1,000 a month. And in our market, that just doesn't go very far unless you've got a humongous down payment. And so finding out what you can afford, and especially if you haven't been paying rent and or any kind of a housing expense, pretend that you're paying that housing expense and find out how comfortable it is. Because once you sign up for a mortgage, you're on the hook for, whatever that payment is. So being really honed in on your budget and knowing what you've got to spend is probably my first piece of advice. The second piece of advice is knowing what's on your credit. A lot of like the Dave Ramseys of the world will tell you that you can buy a house without a credit score, which is true. However, your programs are much more limited. And sometimes it's even what we call a manual underwrite, which changes programs that you qualify for. So even though I don't advocate for getting into a ton of debt, knowing where your credit score is, and the higher that credit score is, the better off you will be. Even as a first-time home buyer, keeping track of where that is can really save you a lot of money. And then the third thing is to sit down with a mortgage professional. Find out what programs are available in your area, down payment assistance, first-time home buying options, and discussing those at length with your specific qualifications.
That's great. So we've got budgeting, we've got, your credit score, and we've got sit down with a professional. And don't be scared to sit down with multiple professionals if you don't like the opinion of maybe the first person you go with. So you don't need to feel like you're handcuffed to anyone.
Totally. That's actually a really good point, Bo. And a lot of people get nervous or shopping because they think it's going to ding their credit to have it accessed multiple times. And that's actually not true. Here at Security National, our initial consultation, we do a soft pull of your credit. It doesn't affect you all. And even if you went to a company that didn't do a soft pull and you say shop with a couple of companies, as long as you're having your credit pulled in the same 30-day window for the same purpose of applying for credit, it only hits you for that one inquiry. So even if you have 4 different people pull it, it only hits you for that one ding. And so you don't be afraid to get multiple quotes, options, opinions.
Absolutely.
There are different programs out there. So that was really a good point.
Absolutely. What advice do you have for buyers looking to secure a mortgage in today's market?
Similar to what we just discussed, knowing your budget. Also, like we talked about, the market moves. And so getting pre-approved today with today's interest rates and or price it's only valid for a short period of time. Because if there is market movement and that interest rate climbs, it really changes your payment and potentially what you qualify for. So you need to be, if you are taking the leap into home ownership, you've got to be dialed in on what the market is doing and how that's affecting you, good or bad. We were in a climate where interest rates were actually improving. And so, and a slight improvement on interest rate can make a huge difference on your purchasing power. I think it is something that everyone talks about right now is the high interest rates and things, but a slight improvement, I mean, it can make a $10,000 swing on the purchase price and the loan amount in which you could qualify for. Also, don't be afraid to ask for concessions. A lot of sellers are sympathetic, especially to first-time home buyers right now, and they are willing to offer closing costs because they know that you're scraping together everything to do it for the first time. And so I think letting people know what your needs are, what you're trying to do, and having a strategy with a really good negotiating real estate agent on your behalf is really wise.
Yeah. Can you go ahead and break down what concessions are?
Yeah. So a concession is a seller paid closing cost, kind of a benefit for buying this particular home that they'll cut you portion of seller paid closing costs. So they'll pay for a chunk of those that you can use for an interest rate buy down for kind of whatever you see fit, which your cash to close is your down payment plus your closing costs if you're bringing in those funds. But if the seller covers those closing costs, then you can just bring in your minimum down payment. So it's a really good idea, and it's really like saving money from right out the gate.
I could save a lot of money for someone. Also, back to credit scores. So say a home buyer would like to improve their credit score beforehand, before applying. Do you have anything you would recommend doing?
I do. So if you are brand new, maybe just graduating high school, and you need to get some established credit, the first thing I would say to do if you don't have any type of credit is to open a secured credit card. Now go to your local bank, whomever you have your debit card, checking, savings with, and get a secured credit card. What makes it secured is you actually have to pledge the money for that limit. So if you want to open a $500 secured credit card, the bank or credit union will set aside $500 in case you skip out on it. They've provided themselves with that collateral. As you build that credit, you won't need to have that money set aside for that because they'll offer you that line of credit. So getting that first secured credit card will help you start to build a credit score. And the important thing is you have to use that credit responsibly.
Yep.
So when you get your credit pulled, most of the time you're trying to borrow money. And they're looking at your credit report to say, well, are they going to pay us back? Well, I don't know. Did they pay these guys back? And so they're trying to predict the future based on and so your credit score is really, did you do what you said you were going to do? And are you going to do what you're saying? Because when we get credits and borrow money, you're just promising to pay. And so you're really putting like a lot of weight into, did you follow through? And so having a good credit score is super important. And it's not so much as just like making payments on time. They also really, like when you have really high credit scores, they put a lot of weight into the types of credit that you have. So there's a mortgage loan. It's got its like own category. Then you've got things like installment loans. Those are mostly like your auto loans and things that have a fixed term. So you borrow money on a specific period of time with what they call a fully amortized payment that you pay back for that length of time, and then it's paid off. Third, you have like your credit cards, which they call a revolving line of credit. So you charge them up, you pay them down, you charge them up, you pay them down. These types of credits on your credit cards, it's uber important to not max them out because most people have life, right? Like you need new tires or a water heater or it's someone's birthday or a vacay. And when your credit card is maxed out, they know you don't have any kind of a lifeline for wiggle room for the next payday. And so you're in big danger zone of going delinquent on those credit cards. So keeping your balance on that credit card below half is ideal. Really, that sweet spot is about 20 to 30% of that limit. So making those payments, charge it up, pay it down. It's important to know what day those creditors report to the credit bureaus because you want to pay it before that balance is recorded. So you can charge it up, but making sure that they report it once a month, that when they go to report it, that your balance is reflecting on that lower percentage and your credit score will climb.
So how can you find out what day they report it?
That's a good question, and not one I have a great answer for, except for if you watch like the weekly credit monitoring sites, you can kind of see some report the beginning of the month, some it's the end, some it's the 5th. It just kind of really depends, and it's not like Chase reports the 15th. Like it's just not really done that way. But if you kind of like watch a site like Credit Karma or something similar to that, you can almost kind of see at what point they're going to report it. And most of them, I think it's around when your billing cycle closes, which sadly is most of the time before you've made your payment to pay it down. And also with credit cards especially, you want to make sure that you're not carrying too big of a balance on them because the interest rates are high. So really using that credit responsibly can save you a lot of money.
And that kind of goes back into our point of budgeting, where if you're really honing in on your budget, you're not going to have to worry about these problems that come with credit cards. You're just going to be getting the pros out of it, not the cons.
Totally. And a credit card is really, I hate to say it, but it's a necessary evil with our online shopping. The fraud that goes on, it's so important to have that security that's offered from that credit card protection. But you have to be careful to not let it run away with you and put, things on there that you don't have an intention of paying. Because if you pay a large credit card balance over months and months of minimum payments, so much money is going down the drain.
Yeah, exactly. All right, so let's circle back and let's go through what the mortgage process looks like for a client.
So we talked about your budget and getting pre-qualified and then meeting with a mortgage professional. What you can expect when you meet with that mortgage professional is us taking a loan application. So it's your name, your date of birth, your social security number, 2 years of your last residence history, and then 2 years of work history. Now, don't get hung up on the work history. If you've been in school, we can use that. You don't always need to have 2 years. But if there is 2 years available, they're looking back for a full 2 year period of where you worked.
Yeah, that's good insight.
Yeah, so be paired with all of your W-2s for the last 2 years, and if available, a couple of current pay stubs, as well as a couple of bank statements. The rule's kind of two. So when we look at your bank statements, we're looking for 2. When we look at your W-2s, we're looking for 2 years, that kind of thing.
Okay.
So if you know all of that information, they'll talk to a mortgage professional. They'll take this loan application, basically run all of your options. I like to meet with somebody, have them tell me exactly what it is that their plans are. How long are you expecting to be in the home? How much money do you have to utilize? Kind of all of those things. Because there is so many loan programs out there that if someone tells me what their goals are, I can really hone it in and pick a path that's really like appropriate for them.
Yeah.
So that's kind of my advice of where to get started. Next, we would issue what we call a pre-approval. So it's your pre-approval letter, and it's almost like your pass to go shop. I've spoken to lots of people that have found the perfect home. They know that they qualify, but they skipped the step in actually qualifying, and the sellers or the listing agent won't let them in to see the house that they want to see, and it's gone. So don't skip the step of getting pre-approved, even if you think you're solid. Because if you are getting financing, they want that pre-approval letter to let you into they don't want looky-loos walking through their house. They want you to be serious. And the pre-approval letter shows that you're serious.
Yeah.
So that's an important thing. Then you can go and find the particular houses that you're looking for. I like to have clients send me a house that meets some of their requirements, because then I can look up the property taxes. I can run a estimate on what it's going to cost to insure. I can take into account if there's any HOA fees, and we're looking at it in real time with what today's interest rates and price is. So I like to do up a fee sheet on that specific house so that they can start to picture it in their mind. Yeah. Okay, houses like this, I'm going to need X number of dollars and X number of concessions from the seller. And they really start to put it together. Yeah,
that's super helpful, because a lot of people, when they're thinking about mortgage, they're just thinking about that one mortgage payment. They're not thinking about other things on a list like insurance. So that's super helpful.
Yes. So your payment is broke down into what we call PITI, which stands for principal, interest, taxes, and insurance. And your housing expense is really all of those combined. So if you are in a flood zone and need flood insurance, if you have an HOA and have an HOA fee, All of those things get combined into what we packing for your housing expense. And you're right. A lot of those, they get hung up on the purchase price and the interest rate and forget about those other expenses, which can add up really fast.
Exactly. That's a huge factor.
Totally. So once you've picked out the perfect house and you're ready to make an offer. So most of the time you're working with your own buyer's agent and they'll draft the paperwork for a contract for an offer to purchase, basically. So the offer to purchase is put together and you're offering to the seller that you want to buy their house for this amount and that you're going to close within these dates and time frames. Once your offer is accepted, sometimes you'll go back and forth with the sellers on dates or amounts, but once it's accepted and what we call under contract, now the fun really starts. You usually only have a couple of days to come up with your earnest money deposit. And what this is a amount that is held in escrow that can be forfeited to the seller if you fail to meet certain deadlines. And if you close, it just gets applied as part of your down payment cash to close overall. But it's basically you putting your money where your mouth is for the seller because they are pulling the house off of the market to let you get your ducks in a row for the next, say, 30 days for financing. And so it protects them that you're serious about buying their home and that you're not just going to walk away and have them have wasted, a couple of weeks when they could have sold it to somebody else. So the earnest money deposit is really important. And it's usually just held by the buyer's brokerage or the title company in a non-interest-bearing escrow account while you get your ducks in a row for your thing. So a lot of people ask me all the time of what earnest money is, but it's basically that, putting your money where your mouth is, telling the seller that you're serious. No. It's customary that amount is between 1% and 3% of the purchase price. If you're a first-time home buyer, though, and you're struggling to come up with a ton of earnest money, honestly, sometimes like $500 or $1,000 is enough, depending on the house that you're buying. So don't get too caught up on that 1% to 3%. Then you've got a couple of different things you're going to do. Don't skip getting a home inspection. A home inspection is a fee that you'll pay up front, out of pocket. We got to pay the home inspector when they go. The cost for that can vary depending on how many bells and whistles you want with that inspection. Do you want a sewer scope? Do you want a radon test? Do you want them to stomp around on the roof? Do you want mold? And you can add a lot of things and they can get pretty expensive. I would say it depends on the house for all the things that you need done. But your real estate agent really will have some good insight into what the bare minimum is to get a home inspection. And the home inspector, what they're doing is they're checking out to see things that you maybe didn't notice. So was the furnace installed right? Is there an earthquake strap on the water heater? Is certain things up to code? Basically, is the house safe and sound that you're buying? I always equate it to getting kind of like a background check because no house is perfect. But if you know what maintenance items you might have shortly after closing, you can prepare for them and budget for them accordingly. So like the roof may be, in its last age of life. And so if you know that you're going to need to shell out some money to replace the roof, you can pass on this house or be prepared for that in the next couple of years. So get a home inspection. That's the number one. And that's kind of through your due diligence period that you're checking out. If you're interested in buying a house and you have 6 dogs and you find out that the city only allows 4 dogs, that's something you want to find out within that due diligence period. Next, you're going to have your finance and appraisal deadline. So we're going to mostly send out an appraiser. They are not a home inspector. However, they are taking measurements of the house and they are making sure that the recent sales in that area for similar homes justify the sales price in which you're paying for.
Yep.
So they're doing what we call comparables, just to make sure that the lender is covered and you're not paying too much for the house that you're buying and that the sales price is justified. That fee also is something that we usually collect for upfront and is out of pocket. And depending on the area, you can plan on it being around $650 to the appraiser because we have to pay the appraiser once they go out.
Yep.
After that, we go through what we call underwriting. So we have all of your pay stubs, your bank statements. We've addressed your credit, your income, your assets, and then a bunch of things with the house all together. And we go in front of an underwriter. And an underwriter is our set of eyes that checks over everything, make sure that we meet certain guidelines. If you're using a first-time homebuyer program that maybe has an income limit, that we've addressed all of the qualifications for the particular program that you're going with, and then make sure that you qualify with all of the things. It's pretty common for them to then issue what they call a conditional approval, and they'll ask for maybe a few things that we missed or need to be corrected, or certain explanations or things. And then once we provide those conditions, underwriting conditions, we go back into underwriting and they'll issue what they call a clear to close. And once we have a clear to close, we can schedule closing. Closing is here in the state of Utah is done at a local title company with a licensed escrow officer. So it's not me, your loan officer, and it's not your real estate agent. It's another third party that holds a different license. Most of these are done in person because they require ink to paper, wet signatures, and they are notarized. The escrow officer will go over all of the consummation paperwork that you are signing. So all parties that are involved in the transaction will sign that paperwork. The seller will sign the deeds transferring ownership to you. Once all of that paperwork has been signed, we do what we call fund and record. So fund is we need your money for your cash to close. We as the lender are sending our money for your loan. The escrow company is paying all of the people. They're going to pay the seller and the agents and everybody involved in the transaction. And then they do what we call record. Recording is what happens with the deeds transferring ownership from seller to buyer and the liens for the mortgage that take place to be recorded at the county. And that is officially when you own your house.
Wow. That was a very in-depth process.
It's a lot, which is why you need somebody looking out on your behalf. Two things I did mention that I maybe should have. We're also getting adequate homeowners insurance in that process. We're making sure that you've got a policy that covers your needs in the house. Also, we would need to lock in your interest rate, which can get a little scary for people. But all we're basically doing is waiting for a day in which the market is hopefully favorable. I equate it to airfare. You know you're going on a trip. You know this is about when you're going, and this is about what you expect to pay. And if there's a slight dip in the price, you take it, and you just sleep better at night, knowing that you locked in your airfare to Barbados at this price, and you're not worried about it skyrocketing on you. So once you're under contract, we most of the time have a 30-day window, and most of our interest rate locks cover a 30-day lock period. I always try to lock in my clients before that finance and appraisal deadline.
Yeah.
Because if you were to back out for reasons for financing and appraisal, you'll get your earnest money. But if you were to back out after that period for any market movement, you're not getting any of that earnest money. So that's a really important thing, is to make sure that you're locked in, ready to go, so that you don't have any money on the line that you could forfeit.
Wow. That is some incredible information. Thank you so much for breaking all of that down for us.
I hope that's helpful.
That's going to be helpful to so many people, honestly. All right, so now let's switch gears, and we're going to go into our rapid fire question segment.
Okay.
So I'm going to ask you a question, and you're just going to reply with the first thing that comes to mind.
Okay.
All right, what's your favorite mortgage myth?
My favorite mortgage myth, I would say it's 20% down, that you don't need to have 20% down. Yeah.
It's a good one. All right. What's the most common mistake first-time homebuyers make?
Not knowing their budget.
Another great one. If you could give one piece of advice to first-time homebuyers, what would it be? Just one piece. I know we've covered a lot.
We have covered a lot. Call a professional.
Call a professional. That's a good one. All right. What's your favorite part about being a loan officer?
That is such a great question. And I have a lot of things that I really enjoy about my job. But the truth is, Bo, I make a difference for people. People live their life in their homes. It is where they celebrate their holidays. It is where they make memories with their families. And I am helping them obtain the American dream. And I work really hard at doing that. And that is my favorite piece of being a loan officer. I went to a closing years ago, and they had little kids. And the one little girl told me that she was getting a rent. They've been living in an apartment and she didn't have a room. And it touched me in such a way that sometimes this job is really stressful.
Yeah.
And there's a lot of plates spinning in the air with market and things that you're doing. But it is worth it when they get there and that they are happy with their purchase. And it's like I said, it's the only way to build wealth. It's really where people live their lives. They put down roots, and I am honored to be a part of their home buying journey.
Yeah. Wow. That's an amazing answer, honestly. I don't know if you have one or not, but what would be, say, a best like book resource for first-time home buyers, if there is?
Oh, that's a good question. There's actually a lot of first-time home buyer online courses that you can take. Both Fannie Mae and Freddie Mac offer one that are free and super valuable. I have taken them personally, mostly because I just wanted to see what I was sending my clients to do.
Yeah.
And I found it worth the time. So it's not really a book, but it's an online course that you can spend, about an hour going through. And it just talks about, if you're going to buy a house, what does that mean? What all the things are you on the hook for? And it's a really good resource. There are some budgeting books and things about money, and you could get really into the market. But really, if it's not something that you're interested in, just hire a professional that like is a geek like me that is doing all of that research on your behalf.
Exactly. So what is your go-to strategy for staying organized at work?
That's a good question that I'm always going to be improving on. I am really in my email, but one thing I, as a professional, do when I'm going through a file, that is what I'm doing. So if my phone rings, doesn't matter who it is. If my email pings in 4 times, doesn't matter what it is. When I am scrubbing and pre-qualifying a file and running loan options, that is, I got blinders on, and that's what I'm doing. I've been an operations manager and managed lots of loan officers in my tenure, and it's easy to get distracted, and it's easy to think that you're going to do it, and you won't. And you're never going to do as good of a job on that file as when you start.
Yeah.
And so combing through that loan application, making sure that I've entered in, the data entry and clerical errors are all taken away, is uber important. And that's, our loan application sets the precedence for what we're approving people for. So if it's marked that you're a first-time home buyer and you're not, now I've done programs that, you actually don't qualify for. Or I've marked that you don't have any kids and you really have 4. Or like the details within your loan application matter. And answering them honestly and accurately is uber important. I have a file right now that in my loan application process, I asked for her marital status, and she told me she was unmarried. And we found out that they have been estranged for 5 years, but are still legally married. And in this case, the property is in a community property state, and it matters. And it actually has really caused a problem in their deal. And sadly, there's no way for me to have known that when I'm asking questions for you, that now we have a huge problem.
Jeez.
That we're trying to do. And so advice for borrowers is your loan officer is on your side. So tell them everything. Don't let me find it out 3 weeks later, because I will find it out, but now I don't have time to fix it. So tell me what we're dealing with and the whole story right from the get-go. I'm on your side, and I'm going to be honest with you, and I don't want it to cost you any money. So let's talk about it. Shoot straight, tell me everything, and let me come up with a path, because if it hits me as a big hornet's nest down here, we're maybe past you getting your earnest money back. We now have, we've spent money on appraisals and inspections and all kinds of things. And now I have a major problem that we're dealing with. So be honest on your loan application, be super straight with it. And as a loan officer, don't forget the details.
So essentially, stay thorough, accurate, and focused.
Totally.
And you're going to be organized no matter what.
That's right.
That. All right. So if you weren't in the mortgage industry, what would you be doing?
Oh, that is a unique question. So I think I mentioned I started in mortgage at 20 years old.
Yeah.
I did some other jobs prior to that. I actually worked for a urologist for a couple of years, which I loved, just in like his office, and he was fabulous, and our office was great. I really enjoyed that. I also have done some event planning. I worked for a real estate coaching company for a couple of years, and I worked in their event planning, so I would book all their meeting space, and that was kind of fun. But truthfully, this is like my calling. Like, I love helping home buyers. Like, I love it. And it feels like I'm not good at a lot of things, but this I am good at. I'm passionate about it. And I genuinely can't see myself doing anything else. It's the truth. Like,
you found the right job.
And actually, like, kind of a fluke.
Yeah.
Like, I found the right job. Like, I seriously went and talked to a professional. I was going to buy a house, and I just felt like, I don't know what any of this says, and I don't know what any of this means, and how do I know that you're telling me the truth? Because you've got to read the paperwork, and I don't understand the paperwork.
Yeah.
So it was kind of an odd thing, and I am grateful every day for the mentors in which I've had that have because there is no degree for this job, right? Like, everything that I've done, I hate to say it, but like, my wealth of knowledge is because I've screwed up before. So when I help loan officers, and I've seen so many files, like, just even, I mean, I got caught off guard with her marital status that's really causing me a problem. And I promise you, I won't make that mistake again.
Yeah.
And it just makes you better. So the more files that you've seen, the more stories that you've been a part of. Here at Security National, we have a great team of folks that we chat with all the time. Like, I can call up another loan officer or several other loan officers and be like, I've got this, what would you do? And a lot of companies aren't like that, where it's really open door and really like real camaraderie of people that they want your file to close. They're happy that you're out, doing it. And so if they've got some insight in, oh, what if you did this loan program, or what if you did this? Which just makes us all better and stronger. So
that's just amazing. It really is.
That's why I'm happy at Security National.
Yeah. All right. So last question. What's one trend in the mortgage industry that excites you?
One trend that excites you. One trend that I think is really kind of like a house hack is an ADU. So that stands for an accessory dwelling unit. So you buy a house, say it's got a basement apartment, or it's got a garage with a living space on it. Living space here in Salt Lake is a little lean, and those separate pieces that you can rent out are kind of coming in at a high dollar. So you buy a house that maybe is, the top of your budget, but you rent part of it out, and your renters pay part of your mortgage. And I think that is genius.
That would be amazing to have for anyone, honestly.
Yeah.
All right. Thank you, Caitlan, so much for your valuable insights today. It was amazing to hear from you. Where can people find you?
I have a YouTube channel, and I'm also on Instagram at caitlin.mtg.lender, and I have a business and personal Facebook, Caitlan Pollock.
We are going to have those in our show notes. Make sure you go give her a follow. She's got a plethora of information, as you could tell from today's episode. If you enjoyed today's episode, please make sure you like, subscribe, and share. You can catch us here on YouTube if you want the video. If you listen to podcasts, you can catch us on most of the major platforms for podcasts. Mind your mortgage and have a wonderful day.